All right, let me see if I could get the video working. And all right, we should be ready to go. Okay, all right. Okay, cool. All right. So good afternoon, everyone. Good morning, good evening, depending on where you're at. Just okay. I have just a few computers here going on. So I have David on one computer here. I have my trading room just behind me, and I'm on another computer right here. So good afternoon, everybody. Good morning, and good evening, depending on where you're at in the world. And welcome. My name is Anka Metcalf, and today I will be sharing with you how you can go from chaos to cash and how a simple trading plan can 10x your trading. And let me see if I have the chat right here because I want a little bit of interaction. Okay, here we go. So I have the chat right here. Okay, cool. All right, how many of you guys really believe that having a trading plan is going to propel your trading? Like, raise your hand or type a one in the chat box. How many of you guys think that by having the right trading plan, basically your cash is going to start showing in? Okay. All right. Perfect. I did believe that when I started trading. Do you know what the reality is? And I had to be very honest. Do you think I had a trading plan when I first started trading? No, I didn't. Because I thought, you know what? I have everything in here. So I thought that knowing how to trade is actually having a trading plan in your head. And I was really wrong because I realized that basically, yeah, and I see some comments here in the room. Right. Okay, so exactly, plan your trade and trade your plan. But here's the thing, it's not only it's not the case always. Because when I first started trading, I had a boatload of education. I had experience, but I didn't have day trading experience. So I only had, like, when I got into day trading, I only had swing trading experience, investing experience, like macro investing experience. I really didn't have, the proper trading experience to day trade. And I thought that if I have the rules in my head, that would be enough, but it's not enough. And I realized this like a month into the process when everything started to be overwhelming and I was putting really long hours because I was focusing on a gazillion of strategies instead of focusing on just my plan. So here I am creating a trading plan for you guys. So grab a pen and paper and be ready to write down some of the things that I put together for you. And actually, this is a presentation created exactly for this event. I've never presented this anywhere else. So this is a premiere. So today you're going to discover how to and how basically a simple rule-based trading plan can transform chaos into consistent profits. And this is what it's all about. My name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, which is a trading education that is specialized in educating individuals how to day trade, swing trade, and invest in any type of market environment and in any market, whether it's the stock market or the futures market or the Forex market or the crypto market. It doesn't matter. They all trade the same way and they all have the same rules. They trade it and they actually have the same rules that they abide by. I have been a professional trader for over 20 years, and I've dedicated these 20 years. I have been trading independently for 20 years. I'm trading on my own and my own trading accounts. I did trade. Also, I did have a mini hedge fund as well at one point, and it was really overwhelming. And with all the regulations, I thought, you know what, might as well trade on my own and educate traders how I do it. I have 10 plus years in investment banking industry and I specialize in high velocity trades. And I am going to share with you a velocity trade that is right on deck today in this presentation. So you have to agree that managing emotions and staying objectives are critical to long-term trading success. And it's imperative that we start trading stress-free. I'm going to give you an example of a trade that we did today. It was basically in the futures market, but I can also correlate it with one trade that I took into the swing segment. And the swing was, for example, into the Qs that triggered today. And that was not the only trade that triggered today. so I could share with you some of the trades that have triggered for me today, but I will share a day trade for you guys as well. But before that, today's agenda will be about learning how you can build up this trading plan, the elements that need to be in the trading plan. And we're going to talk about the 6 keys to a profitable trading plan, what you need to have in your trading plan, how to eliminate and control emotions. Now, as you know, it's completely impossible to eliminate emotions, but we could control them. And I will show you how I control my emotions so I trade stress-free. And I have a systemized approach to trading that is actually very simple to implement because the chart is going to be responsible for your action. So basically your charts are going to be telling you what you need to do. And it's simply very easy. It is, as far as looking at a chart and determining, whether you have an entry or not. You have a really good setup, then you have a trade. You don't have a setup, then you don't have a trade. And we're also going to share with you today the secrets to consistency in any market, whether you're day trading or swing trading. So what I'm going to do right now is I'm going to go to charts, and I'm going to start with the swing version first. So this is the chart of the Qs that you guys right here have right here in front of you. And this is the daily chart of the Qs. And as you can see, I have some notations on the chart. So the notations are the bottom. And as the price action was, breaking down and, pulling back, there was one thing that I was looking at. And of course, these need to be elements that need to be in your trading plan as far as trading education, because you cannot write a trading plan for yourself if you do not have the basic trading education. It is impossible for you to have that. And I think a lot of traders do not have a trading plan, or are having a hard time creating a trading plan because they lack certain elements that they need to know before they actually start building a trading plan. And that is the trading education. That is your foundation. And from that, and from ground up, you just build on it. All right, so as the price action was coming in, I was paying very close attention to the volume, and I know that this is a topic that a lot of you guys are going to enjoy right now. So you can see here that we have a rise in the volume. A rise in the volume means that the momentum is continuing into the directional buys that is set in. So that is basically to the pullback, right? But at this point in time, I just want to show you something very interesting. As the volume was increasing and as the volume was reaching an unprecedented level, I was actually looking at higher time frames. So I was looking at monthly charts, and I saw the possibility to add to my investment portfolio, add some names that I was literally craving to add to my portfolio. One of them was Palantir. PLTR was the symbol, and I had some others on my shopping cart. So basically here, I saw a great opportunity because the market has pulled back into an inflection point that's basically was the top from the pullback that we had in 2022, right? So this is the pullback that started in January of 2021. And as you know, it continued into the bottoming effect of October of 2022. So we had a year of a downtrend, right? So here we just had a brief, let's call it like not even a month, but let's call it a month of a pullback. And here we had a year of a pullback, right? And these were, this is a tariff war. This is totally different than the context with the inflation that we have right now. And by the way, today we had some really good numbers come out. So I'm sure the market reacted really well on those numbers. But anyways, let's talk about the context. So we had a prior high here, and not only that, but we had a prior low here. And this was from 2024, from last year in April. So we basically, the price action came in very close to this prior resistance area. This is called the minor support zone. It's so much stronger than any major support or resistance. This is a minor support resistance, and especially pullbacks that are occurring on higher time frames like weekly charts, monthly charts, quarterly charts are so much more substantial than any other pullback per se. So the pullback came into a minor support, into this prior high, and as you could see here, the happening place for the rotation and from the liftoff in price was at that 200 simple moving average. You guys could see it down here. And from this point on, we were expecting a pullback at or around the 200 simple moving average location, right? And this was in sync with the prior low in here. So just to give you a little bit of a context of where we are right now. So at this point in time, when we saw the volume that came in and it actually reached an unprecedented area, we started looking for long positions ASAP. And it was a work in progress because we wanted to have confirmation. And the confirmation comes from the fact that we needed to see if this is a bottom. And when we're looking for a bottom, we need to see like a rise in volume. And again, this is something of how you read bottoms, right? And how you determine in your trading plan to trade such a scenario that is actually very hard to trade. And a lot of traders do not know how to trade. In fact, the majority of traders do not have a systematic approach to how to trade these bottoms. So in this case, did we buy over here? No, we didn't, but we waited and we waited and we waited until we had some setups and some very strong stocks that were lining up that were really beat up through the first quarter. And we started looking for breakouts above this point. But breakouts in the indices did not come to this point. And then we started to pull back. And at this point, we have two options here. First option was for the price action to pull back and do a complete retracement, a cone completion all the way to the prior low, or shallow pullback and then lift off. And then we did it. We finally had our higher low. We waited for this. I talked to my members every day in the trading room and also in the swing trading service that I run. And I said, we have to wait for some clues that we're ready to go long. And then we're going to fill our carts with stocks that we want to initiate trades in, and we're going to do the lift off. So in this case, this is that moment in time when we started to lift off. Now, guess what? The market started running. We were making money left and right. And then guess what? We needed another confirmation. The other confirmation came in when the second higher low was formed. So you need to have patience to wade into these setups. So basically it boils down to trading education, because if you know, and this is one of the things that you learn in trend formations, and this is the first element that we teach in our classes, is how to identify a change in the trend. Nobody else teaches it out there, because a change in the trend is very hard to identify, and we have a way to identify this change in the trend before the officials come out and say, yep, we're out of the danger of recession, we're out of the danger of a bear market, because everybody labels a bear market as being down 20%. I do label that as well, but I do label it based on what the price action is telling me. And I'm ahead of the curve, because for them, it's just 20%. It's automatic. For me, it's different because I get in the trades sooner than that 20%. And as soon as we have the higher low here, because having a plan that shows you if you have a bottom, and then if you have a higher high, like so, and another higher high, you have the higher high confirmation. So we have the two, and then you have a higher low and a higher low. That to me is a change in the trend. It's a change in the guard. So you have to have the bottom, two higher highs, two higher lows, bam, confirmed uptrend. So right now we're trading. And in fact, if you follow me on X, I've already posted the last week. Ahead of the 20% pop up into the market, I said we are in a confirmed uptrend. We are going to look only for long positions. Shorting is not going to be an option. All right, so because we have been actually in a trade in IWM for some time, and you can see here, like I can show you some stats. We have been in IWM. Where's the April? All right, here's the IWM long at 195. Okay, so this is something that we have been in for some time. So 195 right here into this breakout. Okay, 195, you can see the level right here. And we got in based on the low, higher low, and a higher low confirmation. We waited for a pullback, and here we have it. We have our perfect entry into the 195. We have the second higher low for the stop, and here it is. We have an overall target that we're expecting to hit into a confluence of around 215. 215 because we have a pretty decent confluence resistance from the 200 simple moving average here and from the prior pivot low in here. So this would give you a little bit of a context. So we have been in IWN for some time, but to get back on track with a second trade that we actually initiated this morning, and we took it over 509. We had a huge bottoming tail. That bottoming occurred right into this massive support zone right here that you guys see, right? So this is a massive confluence zone. We have a prior pivot high. We have the 200 SMA. So we have a really great substantial support right here. Our overall target is going to be into the 541. So everything that I shared with you here is right on track with the trading plan. So in order to have a trading plan, you need to have a really good strategy, and you need to have trading education that is going to point you to the right entries, where you're going to place your entry, exactly where you plan on having the stop, identifying the trend and the structure of the pattern, and identifying where the resistance areas are. Therefore, you're going to place your targets into resistance areas. And of course, you need to have a plan as to if the price action is going to start breaking above the all-time high, where's the price going to go? Because the moon is not an indicator, okay? But you need to have some measured move reactions into price, and we have a plan for that. So we have a strategy to apply targets and extension targets above all-time highs. So we have a measured move, because institutional traders do not trade without any kind of measured moves. All right, so let's get back in here. Oh, one thing that I forgot to share, and I'm going to get to NASDAQ right here. So this is an example for planning for a swing trade, right? So you look at the context, you look at everything. Of course, you have to start with your top-down analysis, right? And if you see here, you had a gorgeous buy setup that already occurred into the spies at 480, right? Just above this 479.56, just over this 10 exponential moving average. And this is the overall target of 541 that you're going to be expecting. So this is the cues. So again, start with your top-down analysis. We're going to go through this again. Look at the weekly beautiful extension higher above the resistance area. Overall, this is the clear void. This is the tradable void. This is the velocity trade that I have been specializing in for years. And then this is the daily chart. So you're going to narrow it down to the smaller time frame of your interest of where the entry is at. Now, I'm going to give you another example, and this is in NASDAQ, that a day trade that we did today, right? Because in day trades, you really need to be really, really good at trading in order to make money. So we did our analysis. So yes, everything applies to what was in the cues, right? Because this is still NASDAQ. But my playground today was on the 5-minute chart. So I was watching the 5 minutes. By the way, these are the numbers coming in at 8:30. This is the base that occurred into the open. At the open works, we were expecting volatility. We didn't just jump into the trade. I said to the trading room that, we're going to go long. Shorting is not going to be an option. So we had to wait for the setup. And I said, you know what? We're going to have, if we have a setup, we have a trade. If we don't have a setup, it's very easy. We're not going to have a trade. We're not. Even if the price action is going to go 500 points up, if we don't have a setup, we're not going to get in because we don't have the elements of the trade. And you guys know that without the entry, the stop, the target, position sizing, which is so important, you're not going to have a trade. So we waited. We know that 945 is a really big inflection point in the market because it's a reversal time, right? So this reversal time, 945, we were wanting to see if the price action is going to reverse or if it's going to base, because chances are that if the price action is basing, it's going to have another pop-up. Why? Well, because like Sir Isaac Newton said, an object in motion tends to stay in motion, right? So what goes up, it should go up again. So an object in motion stays in motion, right? So it goes up and up and up and up. All right, so we were waiting for the setup. The setup that we have on deck right here is basically formed by this doji, and also we were monitoring the smaller time frames that I can show you in a second, or you can watch them on your chart. So our entry was over 84. and our stop was under 40, so we gave a little bit of wiggle room, okay? So that being said, we wanted to see the price break over 84. We wanted to give that wiggle room, because how many times have you got triggered in, especially these volatile markets, got you in the trade and then it stopped you out? Well, yes, so we're trying to stay away from that. So this was our entry, this was our stop. So far, two of the parameters we had nailed. We had indicators on our charts that we use free. We don't pay for indicators. Again, stupidest thing ever. I don't pay for anything on my chart, right? And just to give you a simple example, do you think that Wall Street traders go online or listen to a webinar that say, hey, I have an indicator, it's $200, it's $495. If you take it, you're going to find entries, you're going to do this, you're going to do that. No, they don't. But what they listen to is price action, right? So you learn how to trade. You learn how to trade. It's not hard. It's not rocket science, right? All right. So we had targets all the way to 200. We actually had a little bit of pop-up, but we got out at 200, and we got out at 200 by trailing, because this is where we decided our trail stop. And you can see here the price action elevated from the 10 EMA. We decided, and this is where the momentum started to wind down. Look at the volume going down, and we were done. So basically, day trading for me started today from 9:50, and we exited the trade around 10:30. Okay, so this is the duration of the trade, and I still have the trading room up there. You guys can see it. I have my computers there. My students are still into the room, but we're done, and we're done, because the purpose of day trading is not to day trade, every single minute and stock every single second. Is to go for velocity trades where you get in, get out with a bunch of money. And we made like 160 or 170 points, that almost 3 hours. So if you risk $1,000, you get $3,000 on this trade. So just to give you an example, what a good trading plan can do for you and how that could accelerate your profitability. Now we're going to zoom in, and we're going to talk about the 6 keys to a profitable trading plan. Number 1, you have to have clear trading goals. And you have to ask yourself, what is your trading goal? Is it for income? Because then if it's for income, this is it. This is the style, baby. Day trading. Day trading is the style. That's it. Okay. What is your objective? Is it growth? Because if it's growth, it is swing trading, right? So we're going to go here into the cues, right? And the daily chart. So your time frames are going to be different. Your objective is going to be different, right? So this is going to be your swing trade. This is going to be for growth. So what is growth? Growth is basically accumulating income, but also having money to put aside for retirement, right? And if your purpose, for example, is just retirement, right? Then your objective is to trade really high time frames on considerable pullbacks, like the bottom that we had into the market just a few weeks ago, right? And set it and forget it, right? And this is actually my preferred style, growth and retirement. Okay, growth and retirement. I'm really good at income. I have been tripling, quadrupling my accounts every year, year after year after year. We have people in the trading room that have done the same. We have people in the trading room that have quit their jobs. So this is a really good sign, right? Means that we're doing everything right. All right, number 2, define your trading strategy. Choose a proven setup, momentum, breakout, reversal, trend following, whatever it is. I choose trend following, especially in this type of market context, because if you go against the market, it's like sitting in front of a freight train. Use the rule-based criteria for entries, exits, and position sizing. That's why it's key for you to know how to trade, because if you know how to trade, you know how to do your trading plan. You know where your entries need to be. You know where you need to place your stop based on your strategy. You know where your exits are based on your resistance areas, if you're long, or your support areas, if you're short. You know how to position size, because position sizing is key, especially in day trading, especially especially in swing trading, right? This is key. In investing, it's a totally different ball game because you invest based on your risk tolerance. But when it comes to day trading, income creation, and growth, you need to allocate your R. Your R is your risk level, is your position sizing. And you have to know when not to trade, right? When not to trade under unclear or low probability setups. I don't trade every day. Okay, so for example, on Friday is option expiration. I'm going to take the day off. I'm not going to be trading because I know that an option expiration is more like a lottery type environment, right? The price is not true to value. The price gets pinned at or around certain prices. So it may not be a good trading environment. And I don't want to waste 2 hours of my time in the morning. So I'm not going to be trading. Okay, so you have to know when to get into a trade and when not to get into a trade, when to be in the market and when not to be in the market. Another example was in yesterday's session, for example, right? So in yesterday's session, and I'm going to send you, I'm going to answer that question later. How many days in a month is you don't trade because there's no setup? When the market is not setting, I can't know ahead of time if the market is going to set up or not. There can be opportunities every day, but I don't have a track as to, oh, I don't trade 5 days in a week. Every single week is different. Every single month is different. Every single quarter is different. The price action is the only one that is going to tell you when you're going to have a setup and you're not going to have a setup. I'm going to give you one example. In yesterday's trading session, you woke up and the Dow was up 1,200 points. Okay. So what do you do when the Dow is up 1,200 points? How do you trade? Are you going to short it? Because if you're going to short it, you're going to sit in front of, you're going to be like a deer in front of headlights, right? So you're just going to stare at the headlights and you're going to get hit, right, by the freight train because it was a massive push to the upside. Shorting is really not going to be an option because shorting in a really massive power trend, you don't know how low the price is going to go. You can get in. You can get a little bit of a traction lower and then boom, the price action is going to snap back up. Do you guys see this bottoming tail? This was from yesterday. So we opened, we went down and we sit back up so hard. And always remember that all the bears that were in the market got wiped out. They're done. Okay. They're totally done. So yesterday in the market, we had a big push, right? So the best way to trade yesterday's environment, yes, I mean, I said it from the get-go. I mean, I still may have some people in here that are from my trading room and they know. I mean, it's not a problem for swing trading. For swing trading is beautiful. You just trim some of your positions. But if you're a day trader, it's freaking hard to trade when the market is 1,200 points to the upside. When you have NASDAQ 800 points up, like, what are you going to trade, right? So we still had a long position in NASDAQ and we made money, right? But it's not like we made a home run because the overall market yesterday was sideways, was ranging, right? It was going up and down, up and down. It was waiting for the CPI numbers. That's why it's so important to have a trading plan, because if you have a trading plan, then you know how you need to act. So you would be able to identify days where you trade and days when you don't trade, because I cannot know now what a setup and if a setup is going to occur in the market in the next hour or in 5 days from now. I don't know. Okay. I'm not Nostradamus. Okay. So 3, risk management. Risk is very important. Used fixed risk per trade. So for example, nobody should be trading here. I mean, you guys can do whatever you want, but what I'm here for is to reinforce the fact that if you don't respect a good risk, if you don't respect good risk management in your trading, your account is not going to grow. And I'm going to give you some examples here. So number 1, if you're a beginner trader, you could actually risk less than 1% per trade, less than 1% per trade. If you're a really good, decent trader, and if you're a swing trader, you could go as much as 3 to 4%. I usually go 3 to 4% in swing trading. I've been doing it for over 25 to 30 years. I've been on the investment side for so long, so I'm using more. In my day trading activity, I'm using 1%. That's it, 1%. Why? Because day trading is so much more difficult, and you can often stop out because you're dealing with smaller time frames. Okay, you're dealing with smaller time frames. You could get a home run if you are not using 1%. I saw traders in the futures market that are risking half of their account size on a trade. I saw traders that were using more than 75% of their account size on the trade. And the problem here is the futures market, because the futures of the brokers are allowing traders to open an account with $300, with $2,000, with $5,000. And this is not a market to trade with $5,000. That was 10 years ago. And we had a challenge actually 10 years ago, whomever started with me, okay, to double it, triple the account in 6 months. And we did that over and over and over and over again. Okay. But that was the market, not a market now. So $500 risk per day, we would have double it. But that was a totally different market condition. The volatility is off the hook right now. It's like so insane. So 1% for day trading, 2% or 3% for swing trading, but have it the same. What and why? Why do you think that's an issue right here? Because if you have, for example, a loss, let's say you're risking $1,000 on a trade, and that is what your 1%. Your first trade, you're going to lose $1,000. You have another trade, you're going to lose another 1,000. You have the third trade, you're going to lose another 1,000. But if you are taking, let's say, a fourth trade, and that fourth trade, of course, you're trading by the book, by the rule. If you have a setup, you have a trade. You don't have a setup, you don't have a trade. By respecting that R into that 1%, that fourth trade is able to eliminate the 3 R's that you have already occurred. The 3 R's that you lost. Because if this trade, if the fourth trade does the 3 R's, you have eliminated your 3 R losses. What would happen if you have a first trade and you go by your level of confidence and not by what the market is telling you, and you say, hey, you know what, I really love this setup, I'm going to risk $2,000 on this one. So you have a loss of 2,000. You take another trade and you're like, oh man, it did work, I got to get my money back fast. And you take the trade with a $4,000 risk, and that you double it up because you want to make, you're desperate, you want to make your money back. So all of a sudden you're down $6,000, and on your third trade, you're going to chicken out and you're going to say, oh, I'm just going to risk $500 on this trade because I'm freaked out. I lost $6,000. I mean, this is not going well. It's the market. It's not me. Okay. That's always the case. All right. So what happens here? If you have a fourth trade, that one trade that is doing 3 R's for you, and let's say it's making $3,000, you're not even making up for half of your losses. So that's the problem. That's the problem with sizing. And a lot of traders don't, pay attention to this, and they're digging themselves into a hole and a hole and a hole and a hole, and they can't get out of the hole. This is the only way you can get out of the hole. I didn't say it. I didn't invent this. I'm just telling it to you how it is and how I trade. Okay, and always set stop loss on orders, especially when you're day trading. And swing trading, I like to use soft stops. That's a totally different topic. But I like to place alerts at the areas where the stop losses are, and I position size towards where my let's say my alert is, my support is. And also know your maximum drawdown tolerance and enforce that as well. So just want to show you just a quick example here. And this is, let's say, the trade from yesterday, right? Actually, the trade from this morning. I called it for my traders last night. So last night, I told my swing traders that I want to get it. I want to buy the Qs above $594. And here it is. And I want to place the stop at $561. And you can see here, like, let's say you have a $2,000, let's say a $200,000 account, your risk is 2%, Remember, it's swing trading, right? This is your entry. Let's say it's 594 of 584. Your stop is 561. And you're looking to position size. That means that you're going to take the trade with 173 shares. Okay. This is it. You're taking the trade long with 173 shares. So you position size. So you know exactly all the elements of the trade. You know where your entry is. It's right here. You know exactly where your stop is. It's right here. You know exactly where your target is into the all-time highs. Right here, right? You know your position sizing. It's right here. So you know all the elements of the trade. You don't know one thing that we're going to be discussing: trailing. How are you going to get it into target? And what is your game plan? When are you going to lock in some profits? When are you going to lift your stop, etc.? Okay. All right. So this is just an example of all the elements that you need to have in your trade. Number 4, trade management protocol. Have a plan for scaling in and out of positions. Always look for inflection points and always look for areas that are going to develop resistance, or you're always going to have some resistance to the left-hand side outside of the areas that are already established. So look into those levels and also watch price action, because price action is going to show you, for example, when numbers are coming out. For example, Thursday, we have the PPI numbers that are coming out, right? It's either going to be a boom or it's going to be a pullback. Look at that pivot that is going to be formed. So if you get a pullback, look at the pullback and let the pullback bottom. So let the pivot form before you actually do the trail stop. Because if you do a trail in an area which is in cutting into a daily candle, it doesn't make any sense. So you're going to get taken out. So have a plan to scale out into some resistance areas or based on what the information you have from the market, and watch the marketplace alerts always. Use trailing stops or break-even adjustments as the trade progresses, and know how you'll manage open trades during news gaps or volatility spikes. And always be prepared, right? So you know that you're going to have a hard stop here. But let's say now the price action is trading right here. Look at the momentum, right? So you're looking at the daily chart, you're looking at momentum, and you're going like, okay, this is a good solid green bar, right? So I wonder how this is looking, let's say, on a 4-hour chart. And you can see, wow, 4-hour chart, really solid. So you don't need to touch this, right? Because it's really solid. And especially if it's a swing trade, you don't have to micromanage it. I don't micromanage it. In fact, I just look at the when the session starts and when the session closes. All right. So number 5, performance tracking and review. This is one of the most important things, and it's not really considered by many traders. It's maintaining a trading journal with screenshots, notes, and stats. That's how you're going to learn. Put the extra work into trading. When I first started day trading like 20 plus years ago, and again, I came from the investment background. I was swing trading, so I had money into the market. But guess what? I was not a day trader, and I never had a trading journal until the moment that I started to trade. And it's so important because your trading journal is your self-analysis. You're going to be able to understand what you did right, what you did wrong, and how you could improve and how you can improve based on your personal performance. For example, what I used to do, I used to print, like this was 20 years ago, I used to print 2 charts, right? Of the same, let's say of the Qs. Let's say we were taking, we talked about the Q straight. So I would print a chart, 2 charts of the same symbol of the Qs on the same time frame, let's say off the daily. And on one chart, I would write down what I did, my entry, my stop, exactly how you saw it in here, with the entry, the stop, the target, and everything. Okay. So on the other sheet, I would actually write down how I could have managed better the trade. And sometimes, it would coincide and say, hey, I couldn't do anything better than what I already did. And under the circumstances, I did great. Either it worked into target, or I trailed it with profits, or I stopped out. I respected my plan. It's about respecting your plan. So having a trading journal, you have no idea how that is going to improve your trading. That's a different topic. So, but it should be part of your trading plan, but it's a different chapter. Because in your trading journal, you have to have something like you have the date, you have the symbol, you have everything that you want to achieve. The entry, the stop, the target, the exit point, and also have a column for strategy, what strategy you used in order to get to where you are. Review wins and losses on a weekly basis and monthly basis. If you are a swing trader, this is more directed towards swing trading than day trading. And if you are a day trader, you have to do it every single day. At the end of the trading day. Metrics, win rate, average R, expectancy, drawdown, etc. Everything needs to be included. Here's a quick example of how, to this very day, after 20 years, I keep track of all my trades. Obviously, I don't keep track of the setups that I have used for the certain strategies, but I do actually mention them to my traders. Also, the psychological component is again extremely important. Stick to your plan even in drawdowns, because the market environments change and you don't know how 5 minutes from now the market is going to react. You don't know how 5 days from now the market is going to react. So be true to yourself as well. Avoid emotional decisions like revenge trading or over trading, and also have a routine to maintain your mental clarity, obviously, and your focus. So every successful trade begins and ends with a solid plan. Most traders agree on the importance of having a trading plan, yet very few actually take the time to create a detailed one and actually write one down. And like I said, one of the biggest problems is because traders do not know how to trade and they wing it. And once you understand and you learn how to trade, then you are going to have a trading plan that is going to propel your trading extremely, extremely well. Think of your trading plan as your business plan. Like every business, you start a business, you started with a business plan, right? With an outcome. It needs to be written. So it has to be, and it doesn't have to be a novel. You could have it like on a little post-it. So you don't really have to have like 3 to 4 pages of a trading plan, but you need to have some elements like the strategies that most work for you. And by the way, remember when we talked about the trading journal? That is so important, because when you have a trading journal, you know what strategies work for you and you know what strategies do not work for you. So if you have a strategy that works for you, you're going to insist on using that strategy and you're going to ditch the strategies that do not work for you. And that's very simple. So a solid plan includes the entry and the exit strategy. That is absolutely a must. Again, it also includes the area where you need to have your stop in order to position size. So once you have your entry, once you have your stop, that difference between the entry and the stop you can calculate your position size. Consider conditions under which you will not trade, right? So for example, yesterday the market is up, let's say 1,200 points. How do you trade it? You have to wait until you have a strategy that works for you, one that is reflected in your trading journal as well. Risk parameters, stop loss placement, timeframes, and setups that will fit your style. Again, here, for example, when I swing trade, I like to use daily charts. I like to use weekly charts. When I day trade, I like to use 5-minute charts, but it's not a matter of like. It's a matter where the setups are formed, on which time frames the setups are formed. And I like to take setups most importantly on the daily charts, and a lot more clarity for setups that are around the 5-minute charts, 2-minute charts. But that doesn't mean that you're going to ignore and you're going to skip analyzing all the other time frames. So with this in place, you remove guesswork and stress from your trading and bring discipline to your trading plan. So, and I'm going to give you like a swing trading plan example. And this is my, personal swing trading plan example. first of all, you need to talk about your trading goals, achieve consistency, monthly returns, 5 to 10%, or let's say 5 Rs or 6 Rs. That would be great. If you do that consistently, you're going to come ahead and build even wealth. Secondary goal, build capital for long-term investing and financial independence. This is very, very big. Then trading style and time commitment. Okay, so swing trading, typically you're going to hold positions from 2 days to about 10 days. However, things can change a little bit because if you're getting into a pretty stale market environment, you could expect to be in the trade longer, because as long as the price action is still moving in your favor, as long as your stop is holding, you should be staying in the trade and expect it to continue into the targets. Time commitment, I allocate for swing trading 10 to 20 minutes a day. I scan a little bit, I'll set alerts, review trades at the end of the day, etc. Markets that I trade in, my focus is the US markets and the instrument large, for example, mid-cap stocks, liquid ETFs. So I have specific elements that I use into my swing trading selection criteria. For example, in stocks, I look for stocks that are trading above 1.5 million shares daily. I don't look for stocks that are trading 300,000 shares daily. Exclusions, penny stocks, low float, or liquid stocks or ETFs. This is a swing trading plan that I use. And it's kind of like a template, if you will. So setup criteria, bullish trend, right? Bullish trend setup. So you're looking for those higher highs and higher lows. I like pull back to the 10 EMA or 20 SMA on strong volume and bullish patterns. Then if it's a downtrending market, I look for bearish trend setups, right? I'm looking for a short setup, obviously, below the 20 and 50 SMA with high relative volume and failed retest. And confirmation daily charts need to align with the weekly. So I need to have the 2 time frames or even the monthly, because there are gorgeous monthly candles. And we were like all over these monthly candles. Guess what? In day trading, right? Because these were very important trigger points. That's why we selected NASDAQ, for example, to trade today. That's why we selected NASDAQ to trade yesterday and the week before. All right, so it's the elements on the chart that are dictating what and how you need to trade. Of course, entries and exits rules, we have already talked about this. Entries, stop above confirmation candle and stop loss below recent swing low or technical invalidation. Target zones, always have more than 2 to 3 targets, because you don't know if you're going to get a velocity move that is going to expand higher. So you need to be prepared and know how to trail into that. So having multiple targets is going to help you with the management of the trade. All right, here's another example of Apple. Okay, this is another trade that I initiated today. You see that we have major confluence right here. So on a break of confluence, this stock is going to have room to continue higher into the 200 SMA. So I'm just going to show you quickly right here. Let's go to Apple. All right, so here it is. You can see it right here. It's not quite there yet, but if it gets over this 213, it's going to start moving higher. And overall goal is going to be 220 to 225. This is going to be the target for it. Just want to show you, how the plan goes side by side with the technical chart. Exit strategy. You guys know that target 1 is usually the easiest target to achieve, whether you're day trading or swing trading. So it's always a great idea to trim half around that target and have some money in the bank. And of course, it's going to make management so much easier going throughout the targets. Move stop to break even and trail the remainder, for example, of the trade, for example, on a bullish move. Trail off the 10 EMA, for example. If you don't know how to trail, via price action or any other way, trail off the 10 EMA. So as long as the 10 EMA is rising, you're going to look for price continuation higher, and you're going to raise your stop. Higher and higher. Position sizing, we talked about this. Capital allocation, max positions, for example, how many trades you're going to take per day, or a day trade. If you're a day trader, how many trades you're going to take per week if you're a swing trader, or per month if you're a swing trader, but that doesn't necessarily mean that you're going to take those amount of trades. So for example, I allocate 5-day trades every single day, but do I take 5-day trades? No. So for example, yesterday I had 5-day trades that I could have taken. I took only one. I won. I'm done. I didn't like the market context. It was sideways. I was done. I made my money. I run. Today, I made, like I said, almost 3 hours in a trade and almost 160 some plus points in NASDAQ log. I'm done. I'm not going to use the other 4 trades that I have, in my trading plan as a backup. But if I have a loss, okay, I'm going to go back into the market if the environment is right. And if the environment is right, I'm going to get back into the market to see if I could get my money back. Maybe once, maybe twice, maybe 3 times. Okay, that is when I'm going to be risking the rest of my bullets. Trading journal, we talked about a trading journal, how important it is. Like I said, this is a sample trading plan, trade management, review your trades positions, adjust your positions because this position is geared towards swing trading. Mindset is very important, and routine. Have a morning mindset prep, just look at your trading plan. That's the morning mindset prep. Look at your trading plan, know exactly what you need to do, analyze the market, and then see if you identify anything that fits your trading criteria. So now that you have a plan, let's trade, right? So every year, stocks will move about 20 to 30%, maybe more each year. And this happens at least a couple of times a year. We already had a 20% pullback, and now we are already 20% up. So if you took advantage of this, that's 20%, and another 20%, that's 40% already, more than 40%. This is JP Morgan. JP Morgan pulled back 29%, and now it's already, now it is already up 32%. These are just some examples, because swing trading is not about capturing the bottom. Like I said, it's about capturing that core from the bottom to the top, right? Because you're going to trail into the resistance areas. This is what a plan should look like, with defined entry, defined stop, and defined exit. This is IWM trade. Oh, this IWM trade that we took at 195. The trade is still open, and we took it on April 28th. Here's another trade. This is Palantir. We took it at $99.03. Going really well and really strong, by the way. Really, really strong. PLTR. I was so excited to get PLTR because I didn't have this in my long-term portfolio, and I have it in my swing, and I also have it in my investing portfolio. So I'm very happy for PLTR because I never had this. Okay, so it's such a strong stock. All right, so now let's make 2025 your most profitable year yet. How about you decide and say, hey, you know what? I'm going to change everything. Okay. So I'm just going to give you a quick testimonial. This is from Robert, and he's saying, you are the real deal. Thank you for all the hard work you do to find high-odds trades. 100 shares of PLTR have paid for my yearly membership. I'm in for life. And here's another email from a member. He said, just want to take a moment to express my deepest gratitude for all the guidance and support you've provided over the years. Your mentorship has been truly valuable, and I can confidently say that without your insight and teaching, I wouldn't be here where I am today in my trading journey. And because of the skill and confidence I've gained through your coaching. And by the way, I do not ask for any kind of testimonial. I don't. I don't ask for testimonials ever. And here's what Nate said. I've gained through your coaching, and now I'm able to do something incredibly special, bring my entire family on a vacation to Turks and Caicos. This is a milestone I'm incredibly proud of. I'm incredibly proud of, and I owe you a huge part of it. All right, so if you guys want to join the Stock Swing Trader, you're going to get access to this program, which is so much more than a program, right? The Stock Swing Trader is delivered each Monday. It's delivered in a form and an email, so you're going to get an email. I don't really like to call it a newsletter. If you want to call it a newsletter, it's a newsletter, but it's much more than that. So you're delivered a template, let's say each Monday. You get the comprehensive market analysis, macro to micro. You get new market focusing. I have 5 minutes left. So you get market focused themes, you get sector performance, you get technical market overview and trade video for the week. So this is a video that I put up for traders. You get the economic calendar and impact for the week, and we discuss, how the week is likely going to progress with the key levels and everything. And of course, the trades that, exactly how you pretty much have seen it right now with the cues, explanation, etc. You also get access to a real-time performance portfolio. You're also going to get access to pre-launch into my investing picks. This is something that we're going to launch this summer. It's going to be phenomenal. And you get access to a private X feed. I'm going to show you all the details. You're going to get platform layouts, student personal support, risk sheet, money management cheat sheet, and so much more. If you want to get into the stock swing trader, this is the link right here. Okay. And it's $299 a month. You can click the link that I have posted in there, and you're going to have all the details. In the meantime, okay. All right. In the meantime, let me share with you some details, right? Okay. So we have 3 minutes left. Our mission is to make your money work for you, just like I'm making my money work for you. So I'm sharing my personal trades. And not only that, but I'm going to help you manage them. I'm going to tell you where the entry is ahead of time, where the stop is. I'm giving you a position size calculator, so you know how to calculate your size that you're taking the trade with, etc. So this is where you're going to find a lot of information about the program that we have just discussed. You're going to receive this email. This is a sample email with everything that you need to know to get you ready for the week. This is the video. This is access to the performance portfolio for 2025. You're going to get earnings calendar. You're going to get economic releases, monthly performance, and you're going to get, I'm not going to show you below because that's the cheat sheet. And you're going to get access to the trades that, these are the trades for the month of May. This is the recording that I posted here as well. This is the X feed with all the details that you're getting. This morning, about an hour ago, I was messaging my traders, and look at this. Q is great start, text bug because it's launching higher. PLTR massive push today. We're very happy for that. You can see here at Market Outlook, a game plan video just posted in Performance Portfolio. We have 6 new trades for the week, all posted into the Performance Portfolio. And you can see here like wrap-ups, all the targets that have been hit, details about the market charts that are going to help you with all that. So if you guys are ready to join the Stock Swing Trader, here is everything you need to know. It's much more than a program. It's a hand-holding system. And we have been at it we have been in this business for a really long time. TradeOutLoud has been around for many, many years. We have won multiple trading contests, yeah, we have actually been voted the best in the industry by Benzinga. So thanks so much, everybody. I'll see you guys in the Stock Swing Trader. And if there are any questions in here, I'll try to message you privately. Thanks so much, everybody.